Union Finance Minister Arun Jaitley today said the tax structure of the country needs to be globally competitive. Jaitley said besides increasing tax buoyancy, it was also important that policies be non-adversarial.
In the last few months, there is an increasing realization in Indian society that availability of capital within the country is significant but not adequate. And therefore we need additionality of investment. It's investment and investment alone which will enlarge economic activity. That economic activity has to be profitable. That profitability has to result in larger jobs. Our broad policy on indirect taxation is reflected on our stand that within the first few months we brought about a near consensus between the states on the goods and services tax, a bill which is pending parliamentary consideration. And the whole object is that we must have a seamless transfer of goods and services across the country. India becomes one common market. And therefore 1/6 of the global population, which is housed in India, has access in that market. And the taxation process becomes simpler with no tax on tax. Eventually brings down the inflation levels, increases tax buoyancy and adds to our GDP. On direct taxes, as more and more people get into the taxation process and our approach on unaccounted money is guided by that factor, that's a national resource which has to get back into the tax net, increase the volumes of taxation, and then enable governments to make taxation rates more reasonable. That also helps the economy. Besides questions of ethics which are involved. In fact, in the budget this year, I have announced one of the more radical steps. Our direct corporate taxes have to become globally competitive. If global investors have to pay more tax in India than in other economies, then competing economies become more attractive investment destinations. And therefore we have to make our own corporate tax structures globally competitive, and I have laid down a roadmap for bringing down the corporate tax from 30% to 25%, phasing out most exemptions. But at the same time, in the last 1 year, to individual taxpayers, increase the scope of his exemptions so that his capacity to spend and his capacity to save are both increased.
Powered by NNIS.